Hey guys, Czar here. Good morning to you. Happy hump day. It is Wednesday, June the 5th, and we are about 1.5 minutes away from the New York Open. I know I repeat the same thing every day, and I do that on purpose because it's about the power of ritual and about routine, doing the same thing every day, almost exactly the same, if not exactly the same. And that way it becomes truly ingrained into my way of thinking, my way of being, and it becomes rote, right? Because it's so easy when we have open discretion or chaotic thinking or panic or reactionary thinking to make big mistakes, and those mistakes can be super costly. But the more you can do, in my humble opinion, the more you can do the same way every day, repetitive, the less likely you are to make significant and serious mistakes, because it's a pattern, right? You're running a program, and I talk a lot about programming, installing resourceful programs and just running them over and over again. All right, 30 seconds away from the open, guys. This is the Three Sisters for those who are new. The Three Sisters being the NASDAQ, S&P, and Dow 1-minute charts with VWAP, volume weighted average price, the blue line in the middle. These are 2.5 standard deviations. The EMAs are 9 and 21, but you can use whatever you want. Doesn't really matter that much within reason. 5 seconds or so away from the open. We've had a big run up here in the morning. You can see that here. The morning being the UK session. Let me just show that to you right here. See, there's the NASDAQ, big rally, and there's that first 1-minute candle. I like to track the 1-minute open range, which will begin and end. Well, it will end. It'll be set by the end of this candle, and that's in about 40 seconds or so. Ignore these diagonal lines here for a moment. They will go away once this candle closes. And there it is. Dropping down now on all three here, guys. 1-minute open range has been set. We are dropping down below the open range on the Dow. We are and dropping down, sort of trying to drop down here on the S&P. These two are actually fairly aligned right now, the S&P and the Dow. NASDAQ doing something slightly different, but not that much different yet. We have seen almost daily divergences between the NASDAQ and the Dow of late, and that's not a pattern that we see consistently over the years, right? It comes and goes. There's a cycle to it. There's a dance, and learning the dance and where we are in the cycle in terms of personality and nature of the market is a critical piece of this, and that will make all the difference in terms of whether we are profitable or not, or if we can stay in sync and aligned with the market. This market is much bigger, better, stronger than I am, more powerful than I am. So my goal is not to fight it. It is not an adversary. It's my friend, right? It's my friend, and I'm looking to align myself with it. In this case, my entry mechanism for the time being is exclusively the NASDAQ. In the past, you've seen me trade the Dow very much and the S&P from time to time. Right now, it's the NASDAQ has the highest volatility profile, as it always does over any 1 week period, certainly. And really focused on the Three Sisters and then using the NASDAQ for my entry mechanism. Let me show you the trading grid here. This is the 30-minute chart on the bottom left, daily, pardon me. Very bullish daily, by the way. On the top left-hand side there, you see that bullish candle took out 1, 2, 3, 4 days highs here, guys. On this orderly pullback, big rejection, turnaround, reversal day, if you remember that from Friday. And now driving up, looking like we want to attack all-time highs. We'll see if that happens, whether it's today or in the next few days or perhaps never. Who knows? Just believe what the market's telling us here. There's the 1-minute open range. We are dead center now here on the NASDAQ, dropping this zone marker down to this piece right here. It's a minor zone, guys, just from, a couple of hours ago, 2 or 3 hours ago in the UK session. I'm going to raise this marker up to here. We have 2 equal body highs. You see that there? For now, right? That's just for now. That can change very, very quickly here. We are on the New York Open. A massive set of players have just entered this arena, and anything can go down. I don't mean go down like south, but I could do that too, of course. Nothing for me yet, of course. I'm going to be very patient here, guys, as I am every morning. Sometimes I'll take a trade fairly quickly, but it's still in the context of patience, patiently coming up with, and including in the pre-market, by the way, a workable trade idea, an optimal trade idea, not just jumping at anything because it happens to be happening in the moment. And that's key. That's where a lot of traders, newer traders, and even veteran traders go wrong on the market open, is to frantically react to whatever they're seeing and just try to get on board and make sure they don't miss something. Right, because that could be the entire move of the day, and this kind of thinking. And I try not to operate like that. Well, I don't operate like that. Careful not to use the word try. Right, and there are just certain decisions that are non-negotiable, and trading optimal setups is one of them. Inside the open range here, still, guys, on the Nasdaq. Let's take a look at the S&P. We are at the bottom end and dropping below here on the S&P. I'm going to move that zone. Also equal highs on that one. You see that there? Dropping down. But faltering. Dow marching to its own drummer again, as often is the case, as usual lately. Nowhere for this to go, though, guys. I will not be shorting the Dow here unless we get way down here below. And actually, I'm not shorting the Dow at all because I'm trading the Nasdaq on the market open, but you get the idea. I'm not going to take it very seriously, quite frankly. In and of itself, but encompass it, or in concert with the others I will be watching. Still nothing for me to do here, guys. Just kind of hanging about no man's land here. Now, there'll be some traders who will short just because we broke the bottom of that 30-minute candle. For me, that's not enough, right? That's just one piece of the puzzle. We need to see a lot more, remembering that we are in a very bullish configuration here on the daily. Back into the open range on the Nasdaq. Dow dropping, guys, dropping quite hard. May pull down the S&P. Looks like it's going to here a little bit. But again, we saw the structure here, right? We have this zone, another one right below. Now that could drop all the way down. That's about 60 points on the Dow, which is the equivalent of about 25 points on the or 30 points on the Nasdaq. Some traders will ask me, why didn't you take that break below that prior candle? Well, first of all, that's a pre-market candle, and that's fine too. But I don't actually have a candle break model. Right? There's nothing in my checklist that says the candle must break in order for me to enter. That can be a very powerful unit of conviction in my trades, but it's not a must. It's not a signal. It's not a trigger to enter a trade just because it happens, right? That's just one of a long list of units of conviction when I take a trade, if it's even one at all. It's not necessary nor sufficient for me to enter a trade. And so I encourage traders not to get fixated on a 30-minute candle break. I do look for a 30-minute reason to enter every trade. In other words, the 30-minute chart better not be saying something different than my trade idea. It just needs to be supportive, right? Bullish daily, guys. Bullish daily. Think about that. Doesn't mean we can't take a short here. Bullish day, bullish day, bullish day. Of course, the more you say it, the more bullish it becomes, right? Not true. 9:48 a.m. Still nothing to do here. In no man's land, right? Between VWAP and open range. A little cleaner than yesterday's action, where we have some flowing action here. You can see on the S&P. Yesterday was just this grind around EMAs, and I put that video, that no trade video, right beside this one here yesterday on YouTube. I actually posted it about 4 o'clock this morning, so I realized that traders will be able to get a lot of value out of seeing why I don't trade on the market open, not just taking trades. I know that the no trade videos are even more boring than my trade videos, but this is all about whether you want to learn or not. Mindset, thought process, ritualistic behavior, routine, repetition, the mother of skill, all these good things. And so I'll continue to post even my no trade videos, because I know that certainly some of my members find great value in those as well. So yesterday was a no trade day for me. It's starting to feel like today might be a no trade morning at the very least. And lately I've been focused on only trading the first 2 hours of the New York session. And many of my members have found that that has been a very beneficial suggestion or change that they've made in their own lives as well, is to just avoid trading the afternoon completely. Although we've had some really good moves in the afternoon as well. Here we go, guys. 5 seconds to go for news. 2 seconds. And there it is. Dow dropping. And now all three dropping. Let's go back and watch the NASDAQ here. All right, guys, so as you can see, the NASDAQ here very much stuck within the open range. Waited for that news. Didn't offer us anything but more grind. Just a quick flurry and then back to sleep again. And so nothing for me to do. This is where patience comes in. You'll often hear me talk about the patience paradox. But how we need to be engaged in the agonizing or an exhausting process of waiting. It's an active waiting. Doing nothing for extended periods of time is crucial for making money in the markets. So what? I mean, in no other area of our lives is that true, right? When you go to work, the harder you work, perhaps the better you do, the more you get promoted. If it's a production job, the more you do, the more you produce. Higher quantity, perhaps even better quality, and so on. Not the case in trading. Very often, the less you do, the more profitable you are. When you are being incredibly selective and choosy around optimal setups, proper risk management, less is more. It's the opposite world, right? And it's essential that you make peace with the boredom and the powerlessness that comes from sitting and waiting and watching. All right, guys, we're back, and we're coming up on 10:15 here, and there's nothing going on. As you can see, we are very much stuck in the open range here on the NASDAQ. I don't see any promise here on the 30-minute chart as well, and of course, I always need a 30-minute reason to enter. But with this big kind of engulfing wick on the news and then grinding after that, leaves not a whole lot of opportunity for a setup to even occur in the next few minutes at the very least. And so I'm going to call it a video here, guys. We have a bullish daily chart. That nice, clean, bullish move that took out 1, 2, 3, 4 days didn't happen in the New York session. It happened in the UK session here, right? That's where all the good stuff happened. And so there's not much you can do about that if you're a New York trader and you come in after the stuff of the beauty has already happened. That doesn't mean we can't break up into all-time highs here or even reverse and have a nice down move. Anything can happen, but for now, there's no promise of that happening. And so I'll call it a video. Of course, if anything does happen here this morning, I'll come back on and we will talk through it and walk through it. Hopefully you'll find the information here in this no trade video to be of value to you, because avoiding mistakes and entering weak setups can cost you a fortune, right? So there's a lot of value to be had in learning how not to take trades and to sit on your hands. Have an amazing day, guys. Thanks for being here. We'll talk soon.